Imagine being able to live off dividends without working a single day. Sounds too good to be true, right? Well, it's not. In this video, I will show you how you can earn $5,000 to $10,000 a month from dividend investing and what you need to do to achieve this goal. Hello and welcome to Fun Financial Insights, the channel where we make finance fun and easy to understand. If you're new here, please consider subscribing and hitting the bell icon to get notified of our latest videos. Now let's jump right in and let me show you how you can live off dividends by investing in high-quality dividend stocks, ETFs, and REITs that pay you consistent and growing income every month or quarter. I will also share with you some tips and tricks on how to find and evaluate dividend stocks and how to diversify your portfolio to reduce risk and maximize returns. So let me tackle the biggest question first. How much money do you need to invest in dividend stocks to live off the dividends? Well, that depends on two factors, your desired monthly income and the average dividend yield of your portfolio. The dividend yield is the percentage of the stock price that the company pays out as dividends. For example, if the stock is trading at $100 and pays $5 in dividends per year, its dividend yield is 5%. Now, to calculate how much money you need to invest in dividend stocks to live off the dividends, you can use this simple formula. Money needed equals desired monthly income divided by average dividend yield divided by 12. For example, if you want to earn $5,000 a month from dividends and your portfolio has an average dividend yield of 4%, $5,000 divided by 0.04 divided by 12, which will equal $1,250,000. That means you need to invest $1.25 million in a dividend portfolio to earn $5,000 a month from dividends. Of course, this is assuming that the dividend yield and the dividend payments remain consistent, which is not always the case. Now remember, the journey of 1,000 years starts with one step. For you to get to a portfolio of over $1 million, it is important to start small and be consistent. We will look at two possible strategies for starting small and growing your investment. Number one, dividend snowballing. Imagine your investments growing and multiplying like a snowball rolling down a hill, getting bigger and bigger. That's the concept of dividend snowballing. But how does it work? Well, stay tuned and I will break it down in every simple detail for you. Dividend snowballing is basically reinvesting dividends to buy more shares, which then generates more dividends. You see, imagine you own shares in a company that pays dividends. When you receive those dividends, instead of pocketing them, you reinvest them to buy more shares of the same company. Now with more shares, you receive even more dividends in the next payout. And what do you do with those dividends? Yes, you guessed it, reinvest. This cycle continues, and as time passes, your snowball of investments gets bigger and generates more wealth. If you're enjoying this video so far, please do me a favor and hit that like button and leave a comment below. It really helps the channel grow and reach more people who are interested in dividend investing and fun ways to learn finances. Also, if you haven't subscribed yet, please do so and turn on the bell notifications to get notified of future videos. You don't want to miss them. Thank you for your support. Number two is combining dollar cost averaging and dividend investing. Dollar cost averaging is a strategy that can help you lower the amount you pay for investments and minimize risks. It means investing the same amount of money regularly, regardless of the market price. By doing so, you buy more shares when the price is low and fewer shares when the price is high. This reduces your average cost per share over time. By combining dollar cost averaging and dividend investing, you can benefit from both lower cost per share and the compounding effect of reinvesting dividends. Now keep in mind, dividend stocks can increase, decrease, or suspend their dividends depending on their financial performance and outlook. Therefore, you need to be careful when choosing dividend stocks and look for companies that have a history of stable and growing dividends, a strong competitive advantage, and a low payout ratio, and a positive earnings growth. And to get you started, I'll give you some examples of high-quality dividend stocks that meet these criteria. Johnson & Johnson, J&J. This is a diversified healthcare giant that sells consumer products, medical devices, and pharmaceuticals. It has been paying and increasing its dividends for 59 consecutive years, making it a dividend king. Its current dividend yield is 2.5% and its payout ratio is 58%. It has a wide economic moat, a loyal customer base, and a robust pipeline of new drugs. Microsoft, MSFT. This is a technology powerhouse that dominates the software, cloud, and gaming markets. It has been paying and increasing its dividends for 18 consecutive years, making it a dividend achiever. Its current dividend yield is 0.8% and its payout ratio is 30%. It has a strong competitive advantage and a loyal customer base and a high margin business model. Coca-Cola, KO. This is a global beverage leader that sells over 500 brands of drinks in more than 200 countries. It has been paying and increasing its dividends for 59 consecutive years, making it a dividend king. Its current dividend yield is 3% and its payout ratio is 77%. It has a strong brand recognition, a loyal customer base, and a diversified product portfolio. These are just some examples of high-quality dividend stocks you can invest in to live off dividends. Of course, there are many more dividend stocks that you can choose from depending on your risk tolerance, investment goals, and personal preferences. Another way to diversify your portfolio is to invest in REIT ETFs, which are funds that hold a basket of REITs and REIT stocks. REIT ETFs can provide you with exposure to different types of REITs, such as equity REITs, mortgage REITs, and hybrid REITs, as well as different sectors such as residential, commercial, industrial, and healthcare. REIT ETFs can also reduce your risk and volatility as they are less affected by performance of individual REITs. Moreover, REIT ETFs can offer you lower fees and higher liquidity than investing in individual REITs. To illustrate how you can diversify your portfolio with REIT ETFs, let's assume that you have $1.25 million to invest in dividend stocks and you want to allocate 50% of your portfolio to REITs and 50% to other dividend stocks. You can use the following allocation as an example: 25% in Vanguard Real Estate ETF, which is the largest and most diversified REIT ETF, with over 160 holdings and a dividend yield of 4.7%. 10% to iShares Mortgage Real Estate ETF, which is a REIT ETF that focuses on mortgage REITs, which lend money to real estate owners or invest in mortgage-backed securities and have a high dividend yield of 10.3%. 10% to Global X Super Dividend REIT ETF, which is a REIT ETF that invests in the highest dividend-paying REITs across the world and has a dividend yield of 8.3%. 5% to Pacer Benchmark Data and Infrastructure Real Estate SCTR, which is a REIT ETF that invests in data and infrastructure REITs, such as cell towers, data centers, and fiber optic networks, and has a dividend yield of 4.8%. And then 50% in other dividend stocks, such as Johnson & Johnson, Microsoft, and Coca-Cola, which have lower dividend yields but higher dividend growth and stability. By investing in this portfolio, you can expect to earn an average dividend yield of 5.6%, which translates to $5,833 a month in dividend income. To sum up, dividend investing is a great way to generate passive income, achieve financial freedom, and grow your wealth over time. To live off dividends, you need to invest in high-quality dividend stocks that pay you consistent and growing income every month or quarter. You also need to find and evaluate dividend stocks and how to diversify your portfolio to reduce risk and maximize returns. If you follow these steps, you can earn $5,000 to $10,000 a month from dividend investing, depending on your desired income and dividend yield. I hope you found this video helpful, fun, and informative. If you did, please give a thumbs up and share it with your friends and family. And if you have any questions or comments, please leave them below. I would love to hear from you. Thank you for watching, and I'll see you in the next video.